Nick Beecroft is Senior Foreign Exchange Consultant at Saxo Bank, and he's with me now. Nick, thanks for coming in. Right, well, you know, how does this play out on the greenback, and could we see a hike in rates sooner rather than later?
Personally, I don't think we will see an actual hike in rates, but what we may be witnessing is a change in the paradigm which has governed the foreign exchange markets for at least the last 18 months, which could be characterised as risk on, equities up, dollar down. We may be seeing a shift back to a more normal situation, which is growth up, maybe rates up, therefore the dollar up, and that would be a real change.
So that would be a turnaround in the question that we've had about risk aversion, essentially.
Yes, and maybe the markets are focusing on the asymmetric situation that if growth is weak, rates can't go down at all, so you have a one-way bet in a sense.
Okay, what does this all mean, though, in terms of when we look at other currencies such as the euro here as well? You know, 146, two-month high, we've had the dollar against the euro this morning.
Well, I think it's also the case that a number of other major currencies have their own problems. The euro is somewhat bedeviled by the Greek situation at the moment, whether that will be resolved, whether the Greek government would have the stomach for the unpalatable increase in tax and cuts in spending that are required. And
we've also had remarks coming through from ECB members that then the Eurozone's not necessarily going to cover this.
No. And then the nightmare scenario arises of whether Greece would ever cut and run and leave the euro.
But is there a mechanism for them to be able to do that? That would be an enormous challenge for a country such as Greece.
It'd be an enormous challenge, and one would have thought tantamount to sort of an economic suicide. Why would that actually come to pass?
The price would be too high, surely.
Surely, yes, I'd agree.
Okay, well, you know, also we have sterling in the mix as well. Where does sterling go next? Many commentators suggesting that we are already undervalued, but you're suggesting that there's more pain ahead for the pound.
Well, you know me, I'm a perennial sterling bear. And I think the storm clouds at the moment are really in the shape of the forthcoming election. We're seeing the polls become narrower in terms of Conservative lead. The recent one in the Sunday Times this weekend would lead one to believe we're going to get a hung parliament, which, as you know, the UK, the markets hate in terms of the UK. Whereas one is used to coalition government in Europe, all over Europe. It's not the case in the UK, and a strong, decisive government is needed at the moment to cut the fiscal deficit.
So a situation similar to what we had in the early 1990s when we had, of course, Britain dropping out of the exchange rate mechanism, the ERM, and then we had, I think it was Black Wednesday, which was then called White Wednesday, wasn't it?
Yes, it was. And one wonders whether the forthcoming election, which will be held on Thursday as ever, whether that day would come to be known as White Thursday, if it leads to a rather large depreciation in sterling, which would be another form of monetary loosening.
Which is what we've already had, though, Nick. I mean, really, we've seen it down from about, what, $2.10 down to these levels that we're seeing at the moment, $1.62 or thereabouts.
We're in a pretty familiar range for sterling against the dollar at the moment, in the 160s. I don't think you can really say that's weak until we were back into the 130s or so. Admittedly, the sterling is very weak against the euro, but that could form real pressure, this election result.
Right. What about Dubai and what's been happening over there? Is it the elephant in the room, or is something that foreign exchanges are largely shrugging off?
I think the foreign exchange markets will pretty quickly shrug that off. We've seen Abu Dhabi race to the rescue already this weekend, and I think that will continue. What it does form part of, though, is a growing focus on fiscal deficits, fiscal problems in countries, whether it's Greece or UK, which are probably more the problems than Dubai, with Big Brother to rescue them.